The inflation has hit the fan! US May PPI came in higher than expected at 6.5%. CPI surged to 4.2%. Oh, here's a number that should make you throw up that morning coffee in your mouth. The U.S. national debt, when combined with unfunded liabilities for Social Security and Medicare, now works out to roughly $1 million per American household, $39.23 trillion, and rolling right along, baby. U.S. debt has surpassed 100% of GDP for the first time since World War II. U.S. national debt projected to soar to $64 trillion over the next decade. Probably fine. The Four Horsemen of the fiat apocalypse are upon us. War, pestilence, famine, and monetary debasement. Like I said, the transitory inflation has hit the fan. Now, we're not here to judge inflation on its choice of adjective, but the science, the monetary biology, if you will, is clear. I don't care how much Trump loves it. We will not play a part in supporting or going along with the dollar's monetary illness. The numbers are in, they're horrendous. And only weeks into his reign as Fed chair, Kevin Warsh may be forced to defy Trump and raise interest rates. Let me say that again slowly because it's beautiful. The man Trump, handpicked to cut rates, may have to do the one thing his patron forbade: raise them into a debt spiral just in time for July 4th fireworks. So, here's the question that should be keeping you up at night. What happens when the people running the printer finally admit the printer is the problem and they still can't turn it off? Strap the hell in, because the Four Horsemen aren't a metaphor today. They're a supply chain. And by the end of this video, you're going to understand first how a flesh-eating worm, soaring energy prices, and empty grain silos all turn into the same number on your CPI. And the CPI is being very generous. Then we're going to take a look at why those numbers locked Kevin Warsh in a room with 2 exits and a fire is behind each door. Third, why Bitcoin crashed into the hottest inflation in 3 years, and why that's the most bullish thing that could have happened. Last and most importantly, what do you do before the next print? Not after, before. Four Horsemen, one ending. Welcome back. It's go time, baby.
Let's talk about Warsh. He's a big new factor, and he's gonna play very heavily into what happens next. First meeting is the 16th. He'll give a speech on the 17th, and the CME site is saying that there's only a 3% chance of its Fed cutting rates this June, and that by December of this year, there's a 50% chance that Fed funds rate is going to go up. And Warsh has been billed as being somewhat hawkish, and certainly the market is leaning towards he's going to increase rates, or a lot of people I think are making that bet, although the stock market doesn't reflect it. And I think the stock market might be looking through it. And my view is, I'm non-consensus in my views on Warsh. I actually think there's a good chance he's going to cut rates at this meeting. And I think he signaled this because he said, first of all, we got to think about these inflation numbers differently. The PCE number, it's not accurate. We've got to use this new Dallas trimmed PCE, and PCE through April is printing 3.8. Well, the Dallas trimmed is printing 2.3. There's an argument here for cutting rates.
I just checked Truflation, and their annual CPI or calculation of the inflation rate is under 2% right now. I'm sure there's a lot of people saying, hey, look, my life is still really expensive here. But by a number of these metrics, the readings aren't as big as the general BLS CPI.
That's a good data point. And I also think that there's another part of his speeches that really gave us a clue. Several times he said he thought that AI was going to really increase productivity. And one way that you can argue for lower rates not being inflationary is if you get a productivity boost. And then we've had Besant say things like the high inflation is not a permanent condition. It almost makes you think he's thinking transitory.
You can make that argument that, well, this is largely driven by
the war,
the surge in oil prices from the war, and the administration saying the war is going to be over soon, then it should all come down.
Exactly. And we know that Trump wants them cut, and we know that Trump picked him partly on him saying he would cut them. And I think the trade-off he might have made there is he said, well, look, we're going to try and shrink the balance sheet. And by the way, I don't think there's any way in hell he can ever do that. I think that's just a blatant lie. We want to shrink the balance sheet, have the Fed less involved in the economy, but the lower rates lead to growth. And I know they want growth. I just listened to Besant's speech, and it was basically a speech about how we are going to regrow the American economy through industrial policy. A worthwhile thing to do. We've offshored too much, hollowed out our middle class as a result of it. The difficulty with that is you can't do that in a high rate environment. You got to have a lot of grease to get those gears going, and so you've got to cut rates. So non-consensus, I actually think they're going to find a way to cut rates. Now, I actually think there's some possibility, some non-zero possibility that June rolls around and he cuts 50 bips.
Okay, so let's assume you're right. So I got to think the stock market just zooms higher. The big question, I guess, would be the bond market.
Well, that's right.
Will the bond vigilantes be on board with that, or will they?
No, they won't.
Them?
We've already seen more recently the 10-year flirted with 460, 470. Now they've got it kind of back down into the low fours after it did that. But if and when they do what I'm describing, if that's the path they take, the 10-year is going to revolt and it's going to go significantly higher.
Inflation has hit the fan. Inflation has hit the fan, breaking all-time records. Let's break it down. You've been watching this for 100 days now. 100 days of the Iran war. Pray it's actually over this time. What is this, 40th victory and peace deal so far? We're doing pretty good.
We have major points of agreement. They want to make a deal. And we are very willing to make a deal. Well, I think we're going to end it. I can't tell you for sure when they want to make a deal so badly. You have no idea how badly they want to make a deal. They want to make a deal so badly. I do see a deal in Iran. We were very close to a deal.
I think it's close to over, yeah. I mean, I view it as very close to over.
It's looking very good that we're going to make a deal with Iran, and it's going to be a good deal. This process should go very quickly. We're going to end that war very quickly. They want to make a deal so badly. We think we're close to a deal, and that's okay. We're in the final throes of what will be a very, very good deal.
Today makes 39 times that he has said something like that.
To understand the solution, you gotta understand the problem. And here's the part the bald people on CNBC won't connect for you. So I'm gonna do it myself. The Strait of Hormuz, the single most important choke point for oil on the planet, essentially shut down. UCLA's own forecast says if this fully tips, oil goes to $120 a barrel and drags U.S. inflation to 5%. Wood Mackenzie's worst case, $200 a barrel, the biggest energy shock in history. War isn't a horseman because of the bombs. War is a horseman because of the price tag. Every missile near that strait, every broken ceasefire is a tax on every gallon you'll buy this summer. Hold that thought. It's about to feed the next two. Now let's talk about something genuinely disgusting. And no, I don't mean the Fed. The New World screwworm, a flesh-eating parasite that's been gone from the U.S. for decades. As of June 3rd, it's back. USDA confirmed it in a Texas calf. This thing has, and I quote, marched 1,100 miles from southern Mexico to the border. Cool. A zombie maggot is invading from the south. I'm sure it's fine. Now here's why I'm telling you this on a Bitcoin show. When a flesh-eating worm gets into the cattle supply, it could end up meaning they cull herds. You shut borders to livestock, and CNN already wrote the headline 4 days ago. What screwworm means for your beef prices. It means they go up. Another supply shock, another line item on the CPI. Your burger is now a geopolitical event. War throttled the oil. Pestilence is eating the cattle. You can kind of see where this is going, because here's where it all comes together. Remember the oil from the Horseman one? Oil doesn't just move your car, oil makes fertilizer. Choke the strait, spike the crude, and you've just spiked the cost of growing every grain on Earth. This isn't my theory. The World Economic Forum said it out loud. The Hormuz crisis is a supply shock disrupting energy and fertilizer supplies. So look at the numbers. Global food prices up 30.5% from January to May. Wheat, 58% higher. Grain, 34% higher in 5 months. That's the horsemen riding in formation. War spiked the oil spiked the fertilizer, pestilence spiked the beef, and all of it pours into one place. One number, one man's problem. And that's how you get the number I opened with. CPI 4.2%, highest in 3 years coming out of the 2020 what have you. PPI 6.5%, hottest since November 2022, ran 1.1% in a single month when they guessed 0.7. Here's the lie they need you to believe, that inflation is a monetary accident, a whoopsie at the printer. No, The first three horsemen just showed you inflation is a physical event now. Real worms, real wars, real empty silos. The money printer may have caused or emboldened these events, definitely correlation, but it cannot cure them. So here's the trap, and this is the whole game. The Fed has exactly one tool for a supply shock it can't fix, and that tool is the printer. They can't grow oil, they can't kill the worm, they can't conjure wheat, so they do the only thing the machine knows how to do. They paper over it, and they hand you the bill. The headline they buried on page 9, national debt plus unfunded liabilities, roughly $1 million per American household, 39.23 trillion and climbing, past 100% of debt to GDP for the first time since World War II, projected 64 trillion within a decade. This is the Ponzi that's been running since 1971. We could go back to Woodrow if we want, but the great fiat scam? We're just the generation holding the invoice when the worm showed up. The hell? Are we living in Dune? So back to our boy, Kevin. Here's the box he's in, and it is a beautiful, airtight, no-exit box. Door number 1, he cuts rates like Trump wants. Inflation's already at a 3-year high and climbing. Cutting now is pouring gasoline on the kitchen fire because the smoke alarm is just kind of annoying you. PPI goes from 6.5 to who knows, and the dollar gets taken behind the woodshed. Door number 2, he raises rates to look tough on inflation. Congratulations. You just raised the interest payment on 39 trillion of debt. Interest alone already eats $1 trillion plus a year. How can you accelerate the very debt spiral that's debasing the currency in the first place? You defy the president who appointed you on day 40. There is no door number 3. That's the trap. That's the whole game. They can't raise rates without detonating the debt, and they can't cut rates without detonating the dollar. Every Fed chair from here forward is just choosing which fuse to light. And Trump, bless him, went on TV and said, I want him to do whatever he wants. Sure you do, buddy. Sure you do. The decision lands June 17th. Whatever Warsh does, remember which door he picks, because both rooms are on fire. Hottest inflation in 3 years, debasement screaming, and what did the two great debasement hedges, gold and Bitcoin, do this week? They both got smoked. Gold hit a 7-month low, 4,046 cut bucks, down 6.3% in a single week. Bitcoin fell from 73,000 to below 63. I think we touched 59. Bitcoin ETFs bled 4.75 billion in outflows, and JP Morgan strolled out and declared the debasement trade is dead. Bears are screeching. If Bitcoin is digital gold, why is it falling when inflation's ripping? The institutions are leaving. Record ETF outflows, 10 sessions of redemptions, higher for longer rates make boring treasuries pay you to sit still. So why hold a thing that doesn't yield? And look, I'll be honest with you, if you only read the headlines, it can be a little scary. Your cousin texting you told you so. Your dad forwarding you the JP Morgan note like it's scripture. So let me walk you off that ledge, my friend. Put down the bottle, for God's sake. God, that guy's struggling. Bull point 1. This isn't Bitcoin failing. It's leverage failing. We talked about this. Same thing that happened in the October flash crash. 4.75 billion in ETF outflows is mostly arbitrage unwinds, authorized participants rebalancing futures, not believers selling conviction. That's not the church emptying out. That's the money changers getting margin called in the parking lot. Flog a banker, it's what Jesus would do. Bull point 2, they're selling Bitcoin to buy the IPO casino. Part of that outflow is institutions rotating into the SpaceX and AI IPO frenzy. They're not fleeing risk, they're chasing a shinier risk, the one with the Silicon Valley logo on it. Bull point 3, and this is the whole episode, gold and Bitcoin aren't failing because debasement is over. They're falling because the market thinks Warsh will go higher for longer. Read that again. The hedge is selling off on a fear of a rate hike the debt math says can't afford to keep. Bull point 4, the one nobody's saying, the bear case is inflation's ripping and Bitcoin's not responding, but you just watched why inflation is ripping. Worms, wars, wheat. That is supply-side inflation, and supply-side inflation is the one kind the Fed cannot print its way out of without making it worse. which means more debasement, not less. The horsemen aren't the bear case. The horsemen are the bull case wearing a Halloween costume. So here's the setup. Either Warsh hikes and lights the $39 trillion fuse, or he blinks, cuts, and admits the whole thing is rigged for the printer. And the second the market smells that blink, the debasement trade, JP Morgan just buried, climbs out of the coffin and runs. They're not telling you the hedge is dead. They're giving you the discount before the reprice. And when Bitcoin gets repriced, you're going to want to have it in self-custody. We're about to bring it home, but before we do, let's recognize our sponsors powering this show over at the Bitcoin Way. Oh, you gotta be kidding me. Look at our likes.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Our friends at the Bitcoin Way do this for a living. Hardware wallet, your own node, full on-chain verification. They walk you through every step until you mastered it. Plus, privacy phones, Plan B residency, the whole sovereignty stack. Schedule your free 30-minute consultation today by scanning that QR on screen or click the link in the description. Do it today, not next week, today. And here's the dirty secret about every other Bitcoin-backed lender. They're lending your collateral out. They're rehypothecating it. They're playing the same fractional reserve game the banks play with your Bitcoin. And when the music stops, your stack is gone. Ledn doesn't do that. Their custodied loan product means your Bitcoin sits in cold storage. Never lent out, never touched. That's the Satoshi standard. 8 years, $10 billion in origination, 0 customer Bitcoin lost. Lowest rates in the industry, no hidden fees, no fine print, auto top up so you never get liquidated by a wick. 0 prepayment penalties, paid off whenever you want. Don't sell your Bitcoin to buy a house, a car, a business. Borrow against it. Keep your stack. Scan the QR or click the link in the description and head over to ledn.io today. So, the Four Horsemen. And now you know they aren't just a metaphor. War closed the strait. Pestilence is eating the herd. Famine is part of the soaring energy prices. And debasement is just the name we give the moment the people in charge decide you'll pay for all three. And dollars worth a little less every single day. $1 million of debt per household. A Fed chair locked in a room with 2 doors and a fire behind each one. And the 2 great escape assets on sale the exact week the case for them got stronger. Here's the thesis. Carry it out of here. The Fed, JP Morgan, the Bank of England, they're not warning you about a crash. They're warning you about a transition. A 6.5% PPI is not a number. It's 4 horsemen riding into your grocery store. This was never Bitcoin failing. This is a transfer from the people who trust the printer to the people who opted out. Warsh picks a door June 17th. Both rooms are on fire. The only question is whether you're standing in the building when he does. Oh, and if you're serious about Bitcoin mining, there's one event you need to be at this summer. Mining Disrupt 2026, Miami, July 21st through the 23rd. This is the conference for miners, hardware makers, energy companies, and anyone building real Bitcoin infrastructure. Keynotes, panels, massive expo floor. The deals that shape this industry happen here. Use promo code SimplyBitcoin for 20% off your tickets at miningdisrupt.com, and we'll see you in Miami. Stay humble, stack sats, don't sell your corn, smash the like, hit subscribe, give us a pamp, let us know down below which door Warsh is gonna pick. Love you guys, catch you next time. Peace.
If you prefer to go down with the ship, you.